Welcome to Saz Talks Money on Valuetainment. I'm your host, Adam Sosnick, and I'm here to help you build your wealth and save that money. On today's episode, we're going to be breaking down how your money should flow. Let's talk money.
All we talk is money. All we talk is money. All we talk is money. All we talk is money.
So we're going to be talking about how your money should flow. Like you've heard the term cash flow before. What does that actually mean? Basically, it means money doesn't like to stay stagnant. Money doesn't just like to sit around and do nothing. Money likes to move. Money likes to flow. So what you can see behind me is a flow chart of how your money should flow. So it's actually going to be a pretty interactive episode. I'm going to be writing on the board. There's going to be some arrows going left, going right. So pay attention. And at the end of this episode, we're going to be giving you a free PDF that you could use to make sure that your money is flowing in the right direction. So with that said, let's get right into how your money should flow. All right, so let's start at the top. And at the top of the chart, you got income. This is your career. This is your work. This is your job. This is your side hustle. This is how you make that money. So this is where everything starts, right? So this is where the majority of your focus should be, at least initially. Making that money. Focusing on income, 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 income. It's all about making that money. If you're not making that money, you have no cash flow. So that's where everything starts, with income. Now, speaking about income, what is the median income in America today? Well, we've covered this before, but I'll break it down again. The median household income in America today is $63,000, and the median income for a full-time worker is just above $48,000. So what does that basically mean? Most Americans are pulling in between $4,000 and $5,000 a month, varying on your job, your career, your state, and all that. So like I said, it all starts with income. And now you've entered the game of capitalism. You've made that money. Now what do you do with your money? Let's get into the flow chart. So now, once you start to make income, where does your money go from there? Well, step one is it goes right into your checking account. Your checking account is the hub of your money. It's the central nervous system of your money. So boom, your money's in your checking account. Now most people, what do? They get their money, they get time to pay bills. Not so fast. Step one is pay yourself first. So it hits your checking account. Number one, it should go right to your savings account. You've heard that before. Pay yourself first. What does that actually mean? That means before you pay rent, before you pay bills, before you pay credit cards, before you pay creditors, you know who you need to pay first? Well, you need to pay yourself first. Boom. So let's talk about savings, and then we'll get into the rest of the flow chart. So speaking of savings, let's talk about saving that money. The current savings rate in America today is 7.6%, meaning if you make $1,000, you're putting $70.60 in your pocket. What your goal should be is to save 10%. So if you make $1,000, boom, $100 go right into your wallet. You got to pay yourself first. So let's talk about savings. When you talk about goals and accounts, so what is the accounts and what are the goals? Now when we talk about accounts, obviously we're talking about going from your checking to your savings. What's the point here? Emergency fund, rainy day fund, a cushion, right? So God forbid something happens to your life, you're not going back into your checking, going back into debt, you have savings. So this can be obviously in a savings account, in a CD, money market account. The point is that you're stacking cash. Now when we talk about goals, these are short-term goals for the next 6 to 12 months. This is where savings should be, right? 6 to 12 months, the next 1 to 2 years, and then thinking a little bit longer out, the next 3 to 5 years. Maybe you want to buy a house, maybe you want to put a down payment on a property. This is savings, this is savings, this is savings. Save that money. Your goal, if you're going to be paying yourself first, before you get to the rest of this stuff, is to save $10,000. Now, I'm talking about some crazy stats in America. 78% of Americans are living paycheck to paycheck, okay? 78%. 25% have no savings at all, straight up, nothing in the bank, nothing, zero. 40% don't have $400 to cover an emergency. Flat tire, sorry, got to go back into debt, don't have $400. 69% of Americans don't have $1,000 in savings. But here's the catch, here's the saddest part of this. The average American, I know if you're watching this and you're this far into this episode, you're far beyond average, but the average American will make between $1 and $2 million in their lifetime. So don't tell me that you're not making that much money. It's that the fact that you're spending that money. So your goal here, savings, short-term, stack cash, save that money, $10,000. That's your goal. Okay, so that's savings. Now that's just one portion of this flow chart. There's two other portions that we're gonna cover. Obviously your bills, we're gonna get to that, and investments. That's where we're gonna end up here. So you got your checking account, that's the hub. The next step is you got some bills to pay, baby. Everybody's got bills to pay. Everybody watching this has the same big three expenses. What are these big three expenses that we're talking about? Well, housing, transportation, and food and beverage. Where you live, how you get around, and what you eat and drink. So after your big three expenses, that's where everybody differs. Everybody has different expenditures and things that they are spending their money on. You got insurance, you got cell phone, you got clothing. This is personal and discretionary spending. Maybe you're going on vacation, maybe you like to party, maybe you like to drink, maybe you like to have fun, maybe you like to go to games, maybe you like to play video games, maybe you like sports. All different types of personal and discretionary spending. So this is where bills come in. This is what I would call a spender's mentality. Obviously, everyone has the same big three expenses. After that, you're just spending money on the lifestyle you want. Cool, lifestyle. Everybody wants the same lifestyle. We're gonna get back to lifestyle in a second. So the last part of this is debt. Obviously, people have debt. You got credit card debt, you got student loan debt, you got car loan payments. This is all coming after you pay yourself first. So those are your bills, those are your expenses, and just so you know, this right here, my friends, is 80% of your income. So I'm not saying you can't spend money. I'm not saying you can't live the life you want. That's not what I'm saying at all. I'm saying you have 80% of your income to spend on what you want to do with your life. So we just covered that 10% of your money should go to your savings, right? 80% can go to your bills, go to your expenses. Now there's 10% left. Where should that other 10% go? Well, right here, my friends, this goes to investments. So now we have a flow chart going in. We got money coming in, checking, it's going to savings, it's going to bills, and you got investments. So now let's break down investments. So with investments, you actually have two different options, right? So you have money that comes from your checking that goes right into your investments accounts. This is what is known as after-tax dollars. So something like a Roth IRA. One of the best investment accounts you can possibly fathom is a Roth IRA. I encourage you to look into it. You can put in about $6,000 a year depending on your age. So this is after-tax dollars that goes right from your checking right into investments. Now you might be saying, what about pre-tax? What about pre-tax? Well, that's where it comes right from your income right into a 401k account, right into your investments. So if you have a 401k or if you have not signed up for a 401k at work, you need to look into that, and especially you need to look into a match. So that comes from your income. Speaking of income, something that I didn't cover at the beginning, we all know that this is take-home pay income. Now what is gross pay versus net pay? Let's cover that. When your money hits your income, there's a couple things that come out first. Well, namely, taxes. We all know about taxes. So if you make 50 grand a year, that really means you make closer to $40,000 a year. That's taxes, my friend. What else comes out of your paycheck? Social Security tax, Medicare tax, and maybe some people have health insurance coming out of their paycheck before it hits your checking account. Cool, cool, cool. We got that. Now let's get on to investments. So we talked about saving is short term. Well, investments is long term. So speaking of investments, the type of accounts we just discussed, 401k, IRAs, Roth IRAs, these are just very vanilla retirement accounts. What's within these accounts? Well, obviously you have stocks, bonds, mutual funds, index funds, ETFs, target date funds. You can invest in different types of commodities. I know people out there love their crypto. This is all investing, and just keep in mind, investing long-term growth. We're not talking about day trading here. Day trading, short term, you're in, you're out. That's not what I encourage. I encourage long-term investing. Talking about long-term investing, what are your goals with this? There's goals within the next 5 to 10 years, wealth accumulation, playing the stock market, playing the real estate game, having your assets appreciate. You have goals for the next 10 to 20 years. Maybe this is a college savings account for your kids. Maybe this is wealth accumulation, all that fun stuff in the market. And then obviously you have super long term, the next 20, 30, 40 years down the road when you're talking about 401ks and IRAs and talking about long-term investments. So that's long-term investing for retirement. Speaking of retirement, a couple quick facts for you. Number one, The median retirement balance in America today is $60,000. So what does that mean for you? They say that the average American will need between $1 and $2 million to retire comfortably. So if you're sitting at 60 and you need $1 million to retire comfortably, you got a lot of work to do. So speaking of work to do, only 55% of Americans are actually investing. Now, if you didn't know that a 401k, IRA, these types of retirement accounts is considered investing, well, now you know. So what I would love to see is a way higher number of Americans investing. I would love to see 80, 90, freaking 100% of Americans investing in the stock market. That is how you build long-term wealth. Speaking of long-term, it's all about retirement. And in my opinion, retirement is an antiquated term. Nobody successful just retires and does nothing. So I have a different term for you to wrap your head around when it comes to retirement. What is that term? That term is chilling. When you are chilling is when you own your time. When you're chilling, you can do what you want to do with your free time. So let me ask you, if you were chilling with money, you've done this whole flow chart, you've put the money in your checking account, you've saved, you've paid your bills, you've invested, you've done everything. Here's my question for you. What would you do with your free time? Answer that. Think about it. Have you even found out what your why is? So I'll give you the most common responses when I ask people that question, what their chilling is. While you're thinking about it, I'm going to let you know. So number one, people would love to travel. Obviously during COVID right now, people aren't traveling, but when this thing is all said and done, people will start traveling again. I think they're already starting to do that. So number one, people would love to travel. Number two, if you had all the free time in the world, all the money in the world, what else would you do? You would pursue your passion, something that you're super passionate about, whether that's photography, whether that's stand-up comedy, whether that's writing, whether that's playing music. Whatever it is, you'll have time to pursue your passion. And what's number three? The good people out there would love to donate their time and give back to causes they care about. Feeding the homeless, helping the youth, helping disadvantaged families, helping cure cancer, donating your time to causes you care about. This is what most people would do with their free time. And the last thing is obviously doing all this to leave a legacy. So here's the deal. What's the point of doing all this? We got arrows coming in, coming out, coming left, coming right. It's going to your checking, you're saving, you're investing, you're paying your bills. What's the point of doing all this stuff? It's to get to whatever your chillin' is. So I asked you earlier, what's your chillin'? I'd love to hear what your chillin' is in the comments below. So that's it. That's the end of this episode. If you enjoyed this, there's a free PDF in the description below. And if you have not seen my episode on the difference between saving and investing, that's right here. And if you have not seen my video on how to win the money game, how to get to chillin', that's right here. And if you have not subscribed to Valuetainment Economics, please do so below and smash that like button if you enjoyed this video. And as always, save that money.
All we talk is money. All we talk is money. All we talk is money. All we talk is money.